Yesterday, everybody was anticipating that CPI would come in lower and this would give stock markets an excuse to rally higher. However, when CPI data came in, it was horrible. Not a little less than we expected, but horrible. But CPI data came out 1 hour before the markets opened yesterday and we were trending higher. Everybody was anticipating this to be higher and we crashed all the way from 413 to 391 and some change. And now we are seeing a little bit of a bounce, but is this going to continue? So the main things that people were looking at was the core inflation and the year-over-year inflation. People were expecting the core inflation to likely go up a little bit, but the year-over-year inflation also went up. We expected this number right here at 8.3 to be 8.1, which would only be a negative 0.1 decrease, but that was going to be very bullish for the markets. Now, why would something so small be so impactful? That would be because it would be the first time since all this inflation has started that we saw 2 months in a row decrease. If we did see this decrease, then the Fed could stop raising rates at the rate that they have been. When the rate goes up, companies have a harder time getting loans because they have to pay back more on that loan. And when they're not taking out as many loans, it makes it harder for them to expand their company. When they can't expand their company, then growth slows. When growth slows, the stock market dips. The stock market is always forward thinking, and this is why we are dipping. Right now, we are at 2.33 for our interest rates, and the Fed wants to raise to about 3.5 or 3.75 by the end of this year. By March 2023 is when they said they would like to stop raising interest rates and kind of balance at around a 4% interest rate. However, all of that was said before the CPI report came out, and now you have articles and other companies saying that they're predicting the Fed to actually continue to raise up to 4.5 to 4.75 just by February of 2023. There's also something that I'm paying attention to, and that is energy. So gas prices have been going very high. However, recently in the last few months, they've been coming down, and that's because we dipped into our reserve, but we're going to have to fill that reserve back up. We're going to have to buy more oil at some point, and OPEC is not going in our favor either. So in my opinion, when oil inevitably goes back up, we are going to be hit with even higher inflation. Checking out Bitcoin. Bitcoin did the same thing as the market. It bounced to 23,000 in the morning. It was really high. CPI came out 1 hour before the market opened and boom, crashed down at $3,000 in a day. We can check out Ethereum, but to be honest, everything is going to depend on this merger. And even if the merger goes well, it might just kind of slowly trail down because the market's just negative right now. There is no hype. But if the merger has anything negative, it's going to dip. That's just my opinion. And then if we look at Cardano, Cardano's really not doing anything. It did dip. We were about 50 cents, maybe 51, and we dipped down to about 46, and now we're at about 48, 49. I mean, we really didn't do anything. There's a bunch of other negative news in the market, but the main thing that caused the crash yesterday was CPI. But we do still have horrible China news, such as them trying to invade Taiwan, and now apparently the US wants to weigh some sanctions on China to try to prevent them. China also has really strict COVID policies, and nearly 300 million of its residents are still in lockdown, and they cannot pay their wages, they cannot make money, and also their whole housing situation, they're going to have to print more money so that they can finish these houses that they started building, so that they can give them to people, so that those people can continue to make payments, which they can't pay because they're not working. And to be honest, there is a lot more negative news, but I really don't want to just ramble off a bunch of negative things and be that guy. So we're going to go look at a positive case, but with this positive case, I think you have to be extremely patient. So for this bull case, we're going to have to wait for rate hikes to peak. Now, we can predict the rate peak to be around March because that's what the Fed said. However, the Fed has been wrong, and now they might have to change that date. But like we've said, the market is forward thinking. As soon as we peak, or maybe even a little bit before we peak, I do think the stock market will start to have a little bit of a rally. Now, I'm not going to be able to tell you when that's going to happen because we are still living it. We don't know the rate hikes of next month, of the month after, and so forth. Inflation is also constantly coming in, and we don't know if that's going to be higher, lower. We can't anticipate higher in the short term. But overall, we don't know when it's going to peak and when the Fed can start to reverse its rate hikes. So what we're going to have to do is continue to have a proactive approach, continue to watch what the Fed says, continue to wait for them to have some sort of bullish standpoint like, oh, maybe rates don't have to be raised by as much, or we're still going to look for March to be that date that we start to decrease or peak at our rates. So if you start seeing something like, yes, we're going to continue to raise, but we're going to raise by a lot, but March is still going to be our cutoff date, then March could still be a very good date. However, you might actually want to start buying before that, but always wait for the market to tell you that it's reversing. Now, what I mean by waiting for the market to tell you that it's reversing is stuff like this, and no, it's not perfect, but when it drops down and then you make this range. So right here you drop down, you don't know the range yet. And then you bounce up and you're like, okay, like maybe we're gonna break out, but you don't. And then you go up, maybe, and you don't. And you go up and you finally do break out. That is when you start to go long. Appreciate you guys for watching, but I want to let you guys all know I am not a professional stock trader, so don't listen to any of this as far as making a trade. I think macroeconomics and resistance levels are very easy and simple to look at, so I'm not doing anything that you guys couldn't do yourself. But anyways, guys, I know it's a CNFT channel, but the markets really do dictate what CNFTs and NFTs and markets in general are going to do, so I think it's very important that we watch them. Also, shout outs to Kongs. Looks like they're having a decent recovery. Dirtbird's still killing it. And it also looks like Genesis Overexposed are having a little bit of a comeback. So that's cool to see. But anyways, guys, get outside, see your family, see your friends. We're here to make more money so that we can spend more time with them. Until next time, guys, peace.
I get it like a G, but it never came easy. You got me coughing up a lung, I wish I rap like Wheezy. I keep my pace, so I'm sorry that I'm breezy. Keep my sneaks laced, cause I can't afford Yeezys. I don't want the gold, give me BTC. Y'all be acting crazy.